All right, guys, let's do this. So, good morning. I hope that you had a good evening. Uh, pretty eventful, right? Nothing happened. Market is super calm, very dull. Nothing to see, right? All right, that was a joke. Um, so yeah, pretty big news. Yesterday, what happened is there was finally that peace talk, ceasefire news. And again, just like in all the prior weeks, I won't get into that analysis. I'm not a war expert. Don't pretend to be and don't want to be as well. My goal is to make money, to focus on price action, breadth, internals, the liquid leaders, you know the music. That's always the same thing. Nothing changed. Um, so could this be um, ending that correction? Yes, it could. Does it mean that it will be? No, it don't. So no idea if this move will stick, if the ceasefire will stick, etc., etc. But you know what? We don't need to know. We just need to follow price action. And I shared something last night about that. From now on, the key and important preparation and observation will be to observe and see how this new potential uptrend develops. And how do we get that confidence is by looking at how healthy the pullback, the stress tests, the back tests are handled by sellers and buyers. Uh, so now the market is gapping up, all right? 3.5% on NASDAQ, on the small caps as well, 2.6% for the S&P 500, Bitcoin 5-6% as well. So listen, if you don't have exposure right now, yes, that will probably be a follow through day characterized by IBD, right? Um, but would I buy here? No. Unfortunately, we're not that we run into big resistance. There's a good catalyst, and we talked about that um, as well. So we it, it it's not random. The news that happened uh, last night was prepared. Institution were positioning themselves for that move. Uh, yes, there's always a bit of luck, but nothing was random. Last week, what did we have last week? We had an undercut, reclaim of the base area back inside the base above 579 base pivot. So was the trend still down? And was it only a counter trend rally? Yes, it was. All right, there was nothing saying that we would break out like that. All right, uh, but there was constructive action. So just looking at price action, right? So we have an undercut and rally on the weekly time frame. We had that VIX spike, all right, and we were running into a declining weekly structure, all right. But into the close yesterday, we back tested that 579 base structure that we held. That's the clues that I'm trying to explain, right, guys? What led me to have exposure yesterday. And I tried to explain all that in my journal before the close. You can go back and just see what I shared. Basically, I shared everything that was uh, my thought process to keep that exposure. All right, um, and I hate doing this. I don't want to say that I had exposure and I was better than the rest. That's not me. If you know Alex, that's really not me. But I know that those questions will come, and why would you have exposure? That was such a big event, etc., etc. And I'm sorry, but the clues were there. So that's why I think it's important to just, for education, just go through what was happening prior to yesterday, right? Um, all right, so we talked about that weekly undercut and rally, and the tell was really how the sellers and buyers were acting since last Friday, right? So on Monday last week, we had that low. We had a kicker daily reversal on Tuesday, right? So just on the daily time frame, we had a daily reversal confirmed. It does not mean that we have a new trend, guys. It just means that okay, the counter trend rally is confirmed. All right. Now we need to see how we'll react to the declining 21 DMA structure and whatever structure you want to use. But for my time frame, that's the 21 EMA, which I use with that structure. All right. And what happened? And we talked about that a lot. We ran into the declining 21 DMA structure last week on Wednesday. What happened on Friday? Some news, big gap down. But you remember that open, right? It was down 2.5%, and the liquidators were bought aggressively on backtest of their rising structure. The market closed green. All right, so that was kind of the first clue. When you see that you get a rejection of your declining structure, and the buyers are stepping in harder than the sellers, you know right away that there's something going on. All right. So Friday was closed. So that was Thursday. Sorry, wrong day. Um, so we closed the week like that. That's where, based on that action, all right, I covered my shorts. I didn't see that retest of the declining structure as a short opportunity anymore, just by the fact that how those buyers and sellers were acting. All right, that big gap down of 2.5% and closed green was a big clue. Uh, then we opened the week right into the 21-day MA structure, and what did we do yesterday? That was the same story. Opened down 1.5%, retested that prior swing low for kind of an inverse head and shoulder, right? But most importantly, we created a higher low on the right side of that rally, all right? And where did we close? We closed right back above the 21 EMA. We reconfirm the daily reversal of that 586, and we closed back above that recent swing high of 587. All right, so just to sum it up, that's just price action, guys. Weekly undercut and rally, retest of the base structure, close back above the weekly reversal pivot. Swoosh down, kind of climatic action to start last week. Kicker, expectation breaker, however you want to call it. Daily reversal. Then we ran up into the declining 21-day MA structure. That's where you observe that you build your case, that you build your scenario of the market? Is the market is a short opportunity? Do we reject that structure with weakness? Are the sellers stronger than the buyers? And based on last Thursday and yesterday, the story was that buyers are stronger than sellers. We were respecting structure. We built a higher low, meaning that the buyers were getting more and more aggressive of the right side. And we reclaimed all reversal pivot and the 21 EMA as well. Okay, so that was price action. I also talked a lot about the credit spreads. What happened? All right, what happened is we opened last week on a breakout. And what happened on that kicker, an expectation breaker on the Qs? We failed that breakout. All right, so far it's again just counter-trend rally. There's no information that lead you to believe that the correction and pullback, or whatever you want to call this, a bear market, I don't know, whatever please you. There's nothing saying that it's the end of it. All right, it's only a counter-trend rally. But what happened later last week is what is important. All right, on Thursday, what happened? Just when the market rejected the 21 DMA structure and buyers stepped in aggressively, what we had, the first 21 DMA structure breakdown since the reclaim was made at the end of January. So credit spread, what it is, it's institution buying more risk assets than low yield, safer assets. So it basically means that the institution under the hood, since that low was made, were putting more and more risk assets into their books. All right, that's what it means. And you can go back and watch the VIX and credit spreads, and that's why I don't personally use the VIX anymore. Is because the VIX is very often used for hedging, etc., etc. And when you get events and news and the market is a bit fearful, then you get that divergence between the VIX and the credit spread, simply because VIX is often used for hedging. That's my guess for it. But I found that the credit spreads are much more reliable, and they will tell the real story before the move happens. All right, so we had that breakdown last Thursday, follow through on Monday. All right, and what happened yesterday? We had another stress test as we rejected the 21 DMA structure and the Qs. What happened? We retested the now declining 21 DMA structure. And I think I shared that chart 5 or 6 times in my journal yesterday, because that chart was key. You want to know what the institution are doing when there's a stress test and we're trying to establish a higher low. So we retested that declining 21 EMA, and what happened? It was not only in the close, we were pretty weak all day. We retested and we rejected, forming a lower high. All right, so again, that the clues were there. All right, you just have to listen to them. Same thing for Bitcoin. So not my typical entry, I give you that. But sometimes when the tide is shifting, you have to recognize the usual market cycle kind of good assets to play, and Bitcoin is one. If the market goes risk on, then you want to have that Bitcoin exposure. All right, and expectation breaker. We had the same type of setup late last year, January. And what happened? We rejected the weekly structure and break down for a new leg lower. Climatic action, higher low, higher low, higher low. What happened here? Do we reject again? No. We reclaim the weekly reversal pivot, reclaim the 10-week moving average. So there's no guarantee here. Listen, that's not my type of trade. Again, I just want to have that exposure. And that's still below that recent swing high. So Bitcoin is not leading. But it could be later. All right. So we need to take that structure. We need to take that out. All right. So, but you have your channel breakout. All right. Breakout attempt. So reclaim of the 21 EMA. And yesterday was the back test. So breakout, back test. And yesterday, that's why even before the big news hit, I was adding that. Just because the setup was constructive. I had the cushion in my portfolio. And the reclaim and backtest setup was super evident, right? Why it's not my kind of trades? I usually like to trade the leaders, right? So look at my portfolio. That's all leaders. Bitcoin is kind of a mean reversion for me, and is just a risk asset to that that should do good in a risk on market in a market cycle. So that's a good spot. Listen, it corrected 53%. So for a big asset like that's a big correction. But well, historically that's not a big correction for Bitcoin, but compared to the market and all that's still a pretty meaningful move. 2 leg down. So there's a case, right? But I don't want to fill my portfolio with those kinds of lagging names that are just trying to carve up a bottom. You can add that to your portfolio a bit later in the cycle when you could have good momentum on those stage 2 breakout. But I don't want to have all my portfolio in this type of setup. All right. All right, so we covered price action, we covered the internals, credit spreads. The other thing, let's look now at Brett. What Brett was saying. So since that low was made last week, that kicker happened on a 98 GDB. So Brett Trust. All right, so that mark rally day number 1, or yeah, I'm not sure if that was day 1. But yeah, probably because it's the low. But that kicker and that expectation breaker was on huge, not volume, but breadth. All right, 66% participation day. That's big. 18 up down volume. That's big. That's probably the biggest of the last year. You have momentum. 28 stocks in the Nasdaq 100. That's large caps that were up 5% and more. So that's why it was such a big score. And yeah, what happened? McClellan summation flipped up on that kicker and expectation breaker from the lows. All right, so again, nothing was screaming new uptrend. All right, the picture was we have a counter-trend rally. Price is acting good. Price is forming higher lows of the right side. You even have breadth expansion, which is key. So you have the McClellan summation showing that bread is expanding. All right, that's also key. Uh, so yesterday was the 7th. So 2 days ago, uh, the McClellan summation also flipped above the 10 DMA for a nice confirmation. All right, so and we are oversold. So we are at the last November low spot. We are at the last April spot as well. And we are prior to that early 2025 spot as well. So pretty stretch to the downside. Brett was expanding again since that kicker was made last week. Uh, and yesterday it tries to flip back down, to curl down, to hook down. And what happened when the buyer stepped in at the end of the day? That was another clue that led me to keep my exposure. It was because Brett was still expanding and just reclaiming the 10 DMA from an oversold condition. So again, guys, I don't want to sound like that everything was clear, that you should have exposure. That's really not me. Again, I don't want to sound like that. Please don't take that this way. I'm just really explaining what I saw, why I kept my exposure, just for education purposes. All right. Uh, and you hear some people say that it was reckless, it was pure gambling. But when you learn to analyze all these things, price action, the internals, breadth, and I didn't even cover the liquid leaders. Uh, when you just look beyond the hood and just take a few minutes to really look what happened below the indices, uh, you get that picture. All right, so the liquid leaders were all reclaiming their 21 DME structure, building higher lows of the right side after a successful backtest of the rising 21 DME structure. It's all over, guys. Double bottom, higher low, reclaim backtest. Honestly, it looks a bit like last April, where the leaders were shaping up the same way, and there was honestly a lot less leaders setting up last April. Uh, Look at GLW, reclaim backtest, reclaim backtest with a higher low. That's 3 higher low above the rising structure. There's higher lows and backtests of the 21 DMA structure all over the place in the liquid leaders. So when you get to analyze all this, you form an idea about the market and whatever the news is. And by the way, the news came out before the market closed. And that was just kind of a confirmation after the close. So I think that there was a lot less risk that some people want you to believe. But again, I'm just explaining what I saw and why I kept my exposure. So I don't want to ramble too much about it. If you have questions, fire them up. I think that the game plan for today is pretty clear, though. You don't really want to buy a 3.5% gap up, 10% gap up in the leaders. So yeah, that's like 4 to 10% gap up in the leader. So you don't want to buy that. You don't want to buy that gap. There will be profit taking. Uh, and even if you're in a cash position, what you could do is at least wait for that intraday shakeout, that intraday pullback. Wait for maybe around noon, early afternoon, when that shakeout hits. There there will be, or it could be straight at the open as well, that people kind of offload their exposure, or there could be some short squeeze as well, and we see a very strong open. So all in all, I think it's very prudent now. I think the risk is now more elevated to engage here than it was actually yesterday. Um, so make sure to wait for that weakness. Make sure not to buy extended stocks. So very simple rules, guys, and you can use my scan if you want. Well, not this one. You can use that scan. It has a very specific rule not to buy extended. All right, it's one ATR from the 21 EMA. So if your stocks are above one ATR from the 21 EMA, it's extended. So just wait for the market to come back. If it's not today, that will be in the next few days. There will be some stress tests at some point. Leaders will come back to test their rising 21 DME structure. So the beauty with that structure is it rises with the stocks, with the leaders. So when there's some weakness in the market, these leaders will pull back in their 21 DME structure, or at least close enough to it to engage. All right. Uh, so I think it's very prudent to wait for that weakness. As for myself, I will continue to de-risk. I want to continue that trimming process into strength. That's how I trade. I like to have my exposure early before the market moves. I like to trim into that strength, into that momentum that comes into the market. And again, sometimes it works and sometimes it doesn't work, like in the last few months. All right. I've had plenty of those positioning attempts that failed, and I gave back 1, 2, 3% of my equity. But now, if I can position well and be patient with my winners that I have right now, with my potential leaders, and I play them well, uh, I can be out of my drawdown within a month, within a few weeks. And that was a big drawdown for me. I shared my performance update yesterday. You can look into it in my PF update channel. But that was a big drawdown for me. All right, so uh, that chop was real. Uh, Not saying that I played it well. I made some mistakes, but at the end of the day, I have my system. I trust my system. I don't want to change it because it just proved in the last 10 years that over time, if I can get out of those period just not too bruised, uh, then I can make it back super quickly when the market is back. And that's my game. Uh, Again, uh, that's my view. That's my game plan. Uh, I don't really want to cover the focus list like I shared last night. That's more of a stock list than a focus list. All right. But that will be some names that I will watch if they have some weakness. But the other scan will pick them up anyway. The only names that might not be picked up because there are mega caps, but I might want to engage in those uh, via triple ETFs or double ETFs. So Google, I think Google was one of the main mega cap leader in AI space and just reclaimed the 21 DME structure yesterday. Uh, Another random reclaim before such a gambling news, right? Google didn't reclaim the 21 DME structure just by randomness. All right, Amazon was not building that beautiful base and did a reclaim and backtest of structure by being random. Um, AVGO, there was a news yesterday, big gap up above structure. There's a new catalyst. Uh, and now I will want to watch how it hacks on weakness. How and when do we retest the rising 21 DMA structure? And that's another name in the mega caps that I would like to get some exposure. All right. So again, it will be the third time because I think it's important. Don't take all I said this morning as Alex trying to prove a point. Uh, it's not me, all right? If you've been long enough in this room and with me, my goal is not to prove wrong. My goal is not to listen. I don't trade with an ego. I don't run that room with an ego. I'm just a random guy in his basement, trying to make it just like you. All right. Uh, so I don't want to sound like that guy saying this morning that uh, I was right and you should have exposure and here's why. I'm just trying to explain why myself I kept my exposure, and that's really for education purposes. All right. So I hope it's clear. So, guys, enjoy the day. Be careful with that gap up. All right. Just take deep breath before the market opens, which is about now. If you feel FOMO, then focus to control it. All right. If the market is starting a new market cycle, a new uptrend, today is nothing. All right. We're not even retesting the prior highs, and a trend doesn't last one day. All right. So just deep breath, take time to step back, realize that the trend is not going anywhere, and wait for that weakness and progressive exposure from there to take up some risk. All right. So have a good day, everyone. Enjoy and talk to you soon. All right. Cheers. Bye bye.